Before we get to the affairs of Jackson Hole, Gita, I am required to address a bit outside your remit at the International Monetary Fund, and that is what all are watching, which is how the IMF will adapt and adjust to Afghanistan and the Taliban. This has to do with special drawing rights. Explain to our audience the choice set that the managing director and all of you at the IMF have with these unusual events in Afghanistan.
Hi, Tom. It's a pleasure to join your show. Now, SDRs are allocated to all the member countries. Now, which countries can actually use the SDRs depends upon whether the government in that country is being recognized by the membership of the IMF. And at this point, with the recent developments that we've seen, which just are heartbreaking, there is no recognition. So at this point, the SDRs will not be available to be used by Afghanistan.
If we can look at your panel today with the former Vice Chairman Alan Blinder and also with Leaper of Virginia as well, it is to me the most interesting event at Jackson Hole. And I'm going to be honest, Gita, it's more interesting than what the chairman's going to say. We live in a time where we've never seen linkages of fiscal and monetary policy. It's literally we're doing MMT. Within your panel, will you people discuss modern monetary theory? Are we doing MMT in 2022?
So Tom, no, I don't believe we are doing MMT. It's a decade before the COVID crisis was one where everybody was complaining that monetary policy cannot be the only game in town, and that was appropriate. And then COVID struck, and fiscal policy came to town in a big way. So we've seen interaction of the kind that we've never seen before. But it was necessary, it was needed for the kind of challenge the world economy was facing, and it helped prevent a much deeper recession. I mean, our estimate is that the recession would have been 3 times worse last year had it not been for both fiscal and monetary policy support. Now, that said, we have to be very clear why this is good policy, because ultimately, decision-making, central bank decision-making has to be controlled by central bank priorities, central bank goals. And so central bank independence has served countries very well. And it makes sense to do quantitative easing and asset purchases as long as you're doing this independently. This is not about being pressured by governments to do monetary financing. You're meeting your goals. You're keeping inflation expectations anchored. And that's what the difference is.
Gita, this is such a delicate dance. How do you avoid politicizing the central banking community at a time when low interest rates that they're helping continue really is what is allowing some of the fiscal impulse that we see in Washington, D.C.? How fraught does this become with inequality as a focus for the Federal Reserve, for central banks at a time when that really is the purview of fiscal policy and not monetary policy?
There are some things indeed that fiscal policy is just much better place to address. And again, issues of inequality is a great example of that. Now, when we look at which countries are able to do large-scale asset purchases, it is countries that have built up very credible central banks, very transparent central banks with good rules-based policy making. So we have to keep that in mind. I mean, the exception doesn't make the rule. You have to maintain your reputation for keeping your eye on inflation and inflation expectations. And if you do that in good times, and then when you have hit by a crisis, you can do exceptional measures. Well, so, we are living in times of low interest rates, and I suspect that will be the case going forward for many years. So this is a challenge that both fiscal and monetary policy has to deal with. And I would bring in there what's happening in financial markets, because what we are seeing, of course, is very high valuations and, frankly, complacency in financial markets. So there's very little room for surprises at this time. And this is exactly going to be the challenge, which is what we will see in Jackson Hole, which is how do you communicate to be very clear about when you're going to move without creating tantrums.
Gita, there's also the flip side of this, that easy monetary conditions can plug a hole and actually take the pressure off fiscal policymakers from actually putting through some of the policies necessary to bridge some of the issues in society that Fed policy is increasingly becoming aware of. How do you sort of view that, the idea that when the Fed creates this calm, creates this stasis in markets, it can make people, at least in Washington, D.C., feel like there isn't as much of a problem?
I mean, that exactly was the problem before this crisis, right? I mean, everything was left to monetary policy and fiscal policy wasn't doing anything. This time around, at least in the advanced economies, we have seen the recognition that monetary policy cannot do it all. You know, one of the messages I will make is to make sure this continues, and this is not a one-off, you know, intervention that happened with fiscal policy, that this is durable and this continues, because monetary policy cannot solve the kinds of problems you're talking about.
Gita, one final question. I'm going to get you in trouble here. My apologies up front as well. We have had a wonderful set of Federal Reserve chairmen, including a guy named Bernanke, who I think you have a nodding acquaintance with. We've got Clarida of Columbia holding forward on monetary theory and others. Talk to me about the reappointment of a non-PhD economist as chairman of the Fed. Do you care that Jerome Powell isn't a PhD economist?
I think Chair Powell has been doing a great job in very difficult times. And no, I don't care whether he has a PhD or not. I think it's important to get the right inputs from all kinds of people with all kinds of backgrounds. And he's been very clear about that. And he's been reacting very well to the kinds of advice he's been getting too.